In the world of luxury electric vehicles, Lucid Motors recently faced a harsh reality, one that sent shockwaves through its stock value. The fourth quarter and full year 2022 revenue, as well as 2023 production and delivery targets, all missed the mark according to Wall Street estimates. This unexpected stumble caused the Lucid stock price to take a significant hit, plummeting nearly 10% during after-hours trading. Join us as we analyze the dire situation of Lucid Motors and identify the causes of their stock's plummeting. For a company that has been grappling with supply chain challenges and previously had to revise its production ambitions, this setback is a tough blow. Lucid had been riding a positive wave, having outperformed itself by producing 7,180 vehicles last year, surpassing its own initial projection of 6,000 to 7,000 vehicles. A substantial 4,369 of these vehicles found their way to customers in 2022, an achievement that briefly buoyed the company's shares when announced just last month. Lucid Motors faced a pivotal moment on Wednesday as it unveiled its 2023 annual production targets, revealing a plan to manufacture 10,000 to 14,000 vehicles. This projection, however, fell significantly short of analyst expectations, which had initially anticipated a robust 20,000 to 22,000 deliveries for the year. Adding to the challenge, Lucid's revenue performance also failed to meet the mark. In the fourth quarter, the company reported a revenue of $257.7 million, a considerable gap from the projected $302.61 million as per Yahoo Finance data. The full-year revenue is similarly below expectations, with Lucid delivering $608.2 million instead of the anticipated $661 million. As it turns out, Musk's insight appears to have been accurate once more. A few months ago, Elon Musk casually hinted at the possibility of Lucid Motors facing financial difficulties due to its management approach. As it turns out now, Lucid now finds itself grappling with a significant challenge, a substantial struggle in selling their vehicles. Despite these hurdles, Lucid concluded 2022 with approximately $4.9 billion in total liquidity, a reserve deemed sufficient to sustain operations into the first quarter of 2024, including $1.7 billion in cash and cash equivalents. However, the company's free cash flow stood at a deficit of $938,403. The financial landscape for Lucid in 2022 was marked by substantial outflows. The company reported a loss from operations of $749.7 million in the fourth quarter and a cumulative loss of $2.6 billion throughout the year. Investor apprehensions extended to the demand for the Lucid Air sedan, as the reported pre-orders for the vehicle declined from 34,000 in Q3 to 28,000. Lucid followed Tesla's example to stimulate sales by introducing a $7,500 discount for select Air sedans. This maneuver aimed to bolster sales in light of the model's base price of $87,400, which doesn't qualify for the $7,500 federal EV tax credit. Notably, the 28,000 reservation count excludes the agreement with Saudi Arabia's government, which commits to purchasing up to 100,000 vehicles over the next decade. The country's Public Investment Fund, PIF, holds a significant 62% stake in Lucid. Speculation has recently emerged that the PIF may consider taking Lucid private, akin to the fund's prior involvement in discussions with Tesla CEO Elon Musk in 2018. Lucid's ambitions extend to establishing a factory in Saudi Arabia with an annual capacity of 155,000 EVs. As we look ahead to 2023, we'll continue to focus on strong capital discipline, leaving no stone unturned for every cost optimization, said Sherry House, Lucid's chief financial officer, in a statement. She further said, "We're gearing for growth while simultaneously taking a comprehensive look at reducing costs." Investors may also be expressing concerns over the potential necessity for Lucid to seek additional funding in the near future. According to Sherry, the company's existing financial resources of $4.4 billion in cash, along with $500 million accessible through lines of credit, are projected to sustain operations only until the conclusion of 2023, as highlighted by CNBC. Despite these financial considerations, Lucid currently maintains a market capitalization of approximately $15 billion. In the past year, it achieved around $600 million in revenue. Even with the prospect of doubling production, the valuation of the company's stock remains notably elevated. It's reasonable to anticipate that these shares may encounter limited upward momentum unless and until Lucid surpasses its most recent guidance, thereby demonstrating a performance that exceeds market expectations. Based in Newark, California, Lucid was already facing challenges related to supply chain complexities and car delivery obstacles. However, it encountered another setback in the form of aggressive price reductions triggered by Tesla Inc., enticing luxury car consumers away from Lucid's offerings while grappling with mounting interest rates and surging inflation. According to Garrett Nelson, an analyst at CFRA Research, the landscape has considerably changed from a year ago, with an influx of increased competition, including a greater availability of lower-priced EVs compared to Lucid's Air vehicle. This shift has likely led to customer frustration as they endure prolonged waits for the arrival of their ordered vehicles. The company appears unwavering in its commitment to exclusively sell high-end sedans. This strong emphasis on luxury-priced vehicles may initially appear audacious, but it led us to examine their market analysis. The reality is that the popularity of sedans has been waning in comparison to the increasing demand for SUVs, crossovers, and pickups in recent years. The data and figures from automotive analysts reveal that sedans constituted just 28.5% of global car sales in 2022. This represents a notable decline from 30.6% in 2021 and 32.9% in 2020. Conversely, SUVs have been experiencing a surge, steadily augmenting their market share. In fact, the market share of SUVs rose from 40.9% in 2020 to 43.8% in 2022. This shift in consumer preferences holds significant implications. Lucid's exclusive focus on sedans, particularly those positioned in the luxury segment, might not align harmoniously with the evolving dynamics of the market. This raises legitimate concerns about their ability to flexibly adapt and cater to the evolving desires of their customers. Despite the widespread popularity and numerous advantages of SUVs, it appears somewhat baffling that Lucid Motors has concentrated on offering up to 4 distinct sedan models, including one with a staggering price tag of $249,000. In the second quarter of 2023, Lucid Group observed a notable year-over-year increase in vehicle production and deliveries. Lucid Air production reached 2,173 cars, marking an impressive growth rate of 204% compared to the preceding year. There was also a positive trajectory in customer deliveries, with 1,404 vehicles handed over, reflecting a significant 107% increase year-over-year. Lucid's capacity to keep pace with the escalating demand and the momentum of its rivals will play a pivotal role in carving out its position in the luxury electric vehicle market. Consequently, the downturn in the company's stock value has led to substantial challenges for stakeholders and investors. It is evident that the company must take active measures to address these concerns. So what do you think about Lucid's shares dropping? Let us know in the comments section below. And if you liked this video, be sure to like it and subscribe to our channel for more exciting news like this.